All right, so I'm putting this in 2 times speed, so we're not here all day. It's just a film reading session, just like in sports. And I always start off my day looking for the obvious draws on liquidity. Um, so you're seeing a little bit into the session already, but there is hourly fair value gap or hourly SIBI that I'm looking at. We tapped into it. Candles didn't close above halfway, so we're showing some bearish price action that gives me that makes me want to target shorts going into London lows, which is the yellow line on my chart. And now I just want to look for the first presented fair value gap of the day to enter going short, and that'll be pretty much my trade. So if anything else happens, I'm not really tripping on it, not paying attention to it. So just waiting, um, seeing how prices reacting to different things, and I am looking to see basically anything that's gonna confirm my bias going into the day. Right now, we're just seeing a whole bunch of balanced price action, meaning there's no real fair value gaps or anything, and that's not really what I want to trade. So I want to just wait. I'm sitting on my hands until I see something that makes me jump at it. I'm only gonna go in with about 3 contracts. I don't want to go in too heavy because I'm still digging myself out of a hole right now. But what you're gonna see is me marking out order blocks. Um, you'll see me marking out higher time frame PD arrays like fair value gaps. Um, Another PD array you'll see is volume imbalances, but I don't have any in this video or in this trade. But um, that's another tool you could add in the bag if you know how to use it. You want to keep your strategy as simple as possible, like very mechanical. Like I can go 90 days back and mark out exactly where I would have got in and got out, and I can tell if I would have won or lost the trade. But right now I'm on a 4 hour time frame, marking out the different fair value gaps, and I'm seeing if everything is lining up with how I think it's gonna be. So there is, as always, I have ES and NQ side by side to see if we're moving together. It's called a decoupled market if it's not moving in sync. So right now it's kind of decoupled. It's not really synced up together. So it's lower probability, meaning I could see a setup on NQ, but it's not really going I don't expect it to give me that clean price action just yet. But sooner rather than later, both of them are gonna sync up, and we'll be able to get a nice clean move in the direction that I want it to. So just gonna map it out and then just wait till it happens. I don't know why that happened, but it happens. I guess my stuff gets overheated or whatever. But anyway, back to back to the trade. And if it happens again, I'm just gonna have to deal with it because I'm not about to sit here and edit all that. I'm here to watch the trades, not be on the world's best editor's YouTube video. All right, so look, I'm looking at this first presentation fair value gap from a couple of days ago, seeing how it's reacting to it. I'm putting my limit order in right now for a sell because we got that first presented fair value gap the day of, well, on that Wednesday. So putting my stop loss at the previous candle's high, targeting London lows, and just gonna see what happens going forward. We also get first presented fair value gap on ES, tapping into that nice. So right now, as you can see, the price is getting in sync. So now you should see a nice clean move in your direction. So you can see me targeting, that's the session highs and lows right there. The chart looks a little cluttered right now because of all the indicators I have on, but I always like to clean my charts up as much as possible just to focus on price because that's what it's all about, the actual price, not however many lines you draw on your chart, not about the indicators. So that London low right there that I marked out, that's my, oh, here we go with this, bro. That is my target. So overall, that's my target, and I am, because price is like doing a little indecisive thing. I'm like, all right, that could be my final take profit, but the most obvious setup would be the most recent lows. So I'm gonna move my take profit to that level, and not be greedy with it. Because there's days where the market is just gonna want to move, and there's days where the market is gonna be a little reluctant. It's gonna go back to your break even. So that's why you don't want to always just hurry up and put your stop loss in break even, because you could get stopped out of a good trade. So I'm just marking stuff out, pulling out the little. I call that a Jolly Rancher. I don't know what you're supposed to call it, but I'm mapping out my risk to reward ratio and seeing if it's a good trade setup based off of risk to reward. I think we go back to, so we're interacting with this first presented fair value gap from a couple of days ago, and that's why it's a good idea to take profit at first presented fair value gaps, or at least acknowledge them, keep them in the back of your head during your trade, because price really loves to refer back to that. But got a little bit of drawdown there, but I want to see price take off. Could have added there if I was feeling up to it, but I was good. I think I have, how many contracts? I have two cons, so yeah, that's not bad. And then the most obvious level is right there. That's take profit one. Um, the red line. It's about 50 handles. So it's 100 handles to my London low, and that red line right there is the most recent lows, and that is about 50 handles. So 50 points. So that's still a good trade. And what I want to do is I want to look at how price reacts once we sweep those initial lows, and then I'm gonna go ahead and just aggressively manage the trade. So once I get below the red line, I'm I wanted to take one off, but I was like, you know what? I'm gonna keep it on, and then I'm gonna just, if we start to show a bullish reversal pattern, then I'll just go ahead and just take full profit and look to trade the next day. So we're just coming down here, and stop loss is in profit, so, or at break even, so there's no possible way to lose. I'm looking on higher time frames to see if we're getting any bullish signs that I missed. I still like to always cycle through my time frames, because we're human, we mess up. And just holding it. And this is the patience part. You're gonna get a little bit of drawback, drawdown, retracements, all that, but it's fine. We're coming above that red line again. And we're just working through it. So we're just swiping through the liquidity and causing all types of disruption for people who want to get into the party late, people getting stopped out, all that. So I was gonna put a limit order there to right at the red line, but I'm like, you know what, bro? I wind up taking it off, because I'm like, once we come back down, I'll just get out here, because there's no need for me to just play around with this, turn this good day into a bad day. So we got another aggressive push down, Trying to see if we could get some more follow through towards my final take profit. And we're coming back into that red line again. So we're just working with the same price range, and I'm I'm good. This is a good trade. No need to hold on to it for too much longer. You could just wait for the next setup, which is what I wound up doing anyway. We're inside of a 4-hour BISI or a 4-hour bullish fair value gap, and the 4-hour, the higher time frame is what's really going on. So you want to be aligned with the higher time frame to make sure that you'll have a higher probability of your trade working out. So I'm pretty sure I'll take profit here pretty soon. I'm looking on different time frames, see if I missed anything. Trying to see if we can break these lows. Not happening, Captain. So yeah, price is losing steam, and it's fine because we already moved aggressively for a minute. So it's fine for it to want to chill out for a little bit or even retrace. So you have to take that into consideration. And if we do retrace, or is it a mark out your next highs and see if it's worth catching a reversal pattern or just sitting out and then catching the next wave down. All right, so this pretty much wraps up that first trade I took, or the only trade I took on a day. Yeah, I just got out right here. No, I didn't. Not yet. Didn't get out yet. The price just goes back and forth. Just consolidating. I put my stop loss above where I would have gotten in on my entry model. So the second candle of a fair value gap. And I just, oh my bad. You want to keep your ideology pretty much the same. You don't want to be moving around. Like as far as stop placements, wherever you would normally enter or exit, take that in consideration for managing the active trade. So because I would normally get in on that fair value gap right there and put my stop loss above the second candle's high, that's where I will put it while I'm in the trade, even though I didn't get in on that fair value gap. So yeah, pretty much that's pretty much the end of that trade. I got out and made about like $200 or something per account, something like that. And that's fine. I didn't catch the entire move, but we made a profit. Got a little retracement back. Yeah, and then I'm ready to close here. We're just working these candle ranges. That was the end of that first trade. So on the second trade, I didn't take it, but this is, you can still get some good reps in, get some practice in on what you would do, without having the stress or the pressure of being right or wrong. And that's okay. Like, especially beginning, you shouldn't even be putting any risk on the table yet. You want to watch and see, build up that confidence. So then when you see it in real life practice action and you put money on the line, you can actually have an extra layer of confidence and not second guess yourself or doubt yourself. So I'm marking out, there's a bullish order block file. We swept liquidity. So swept liquidity, bullish order block. There's a bullish fair value gap on the 1 minute. There's an inversion fair value gap on that 1 minute right there. Then there's another inversion fair value gap, which is that orange box that I drew above that BISI and lining up with that 1 minute order block. So that's multiple things in the same area that's giving you high conviction that you can enter that trade. So I marked out the trade, and your first take profit would be, your responsible take profit would be that yellow first presented fair value gap from a couple of days ago. As you can see, price was interacting with that earlier. So you'll be smart to take, that's right above the recent highs, and you saw price was interacting with it earlier. So you could steal about 20, 30 handles or like 30, 40 handles on that move right there and profit on that on the way back up. It's also close to a, those equal highs right there, also close to a what is that? I think that's a 1 hour. Yeah, that's a 1 hour bearish order block. So remember, higher time frames have higher power on what's going to happen with the price. So taking one off or taking your full position off around that area between the 1 minute, between that first presented fair value gap and those relative equal highs in that red line that I drew, that's where you want to take your profit, somewhere in there. If you got in that green box down there with limited risk, your stop loss would be at that, pretty much at that low, that swing low, and you could have scalped and made money going down and up. But that's pretty much to wrap up the trades, both of them. Like I said, I only took one, and that's all you need. You don't need to hit 100 handles a day. You don't need to go crazy. If you can consistently hit 20 to 50 handles in a day, you're good. Because all you have to do is size up, and you'll start getting some crazy, crazy paydays. But also, when you're in drawdown, like how I am right now, you want to trade responsibly too. You don't want to knock yourself out the game, especially with the prop firms. If you're trading your own capital, it's a little bit different. But with prop firms, you only get a small percentage of drawdown, which they give you a small percentage of drawdown, and they give you a whole bunch of buying power to basically knock yourself out the game. You have to be responsible enough to know, look, although I could go in and make 10K today, I need to make these $200, $300 days, build up enough cushion so I can survive some drawdown and give myself the ability to go attack those 5K, 10K days. Because who doesn't want to make that much money in a single trading session? So that's pretty much it for the trades. I'll catch y'all in the next video, and hopefully I can figure out what's going on with this tripod that's being my opposition. But yeah, like, comment, subscribe, all that, and trying to get some of this YouTube money.